Hello, everybody, and welcome to the Dash Trader Newsroom and the number one best trader spring novice competition week 4 review and winner announcement. So we got that finally to the last day of the competition, and we have our winners. Always an exciting time for us. My name is Michael DeJoy. I'm the Director of Educational Services and a licensed professional here at DAS. And I'm joined by my co-host, Jill Molandrino, Global Markets Reporter at Nasdaq. Jill, how are you?
Good, doing well. I'm excited about the competition winner. I think it's some of the best stats that we've seen.
Yes. I mean, we haven't had, certainly we've had day trading volatility, and this was a day trading competition. And as day traders, they actually made some decent money this time.
So, they definitely did.
Yeah. We're going to jump right into the news. And obviously, I'm sure you've talked about this a few times already this week. But Amazon misses, and obviously we had Netflix big miss or loss of subscribers in all markets except for Asia Pacific. So is this the end of big tech, or is it just a bump in the road?
Well, you know what, Mike? It's so interesting. We were up 3.4% on the Nasdaq 100 yesterday, going into those key prints at the end of the day, and we were down. What is it? 3.4% today. So certainly the round trips that we've seen are dramatic. I would say it's a bump in the road. I'm a longer term investor. I don't day trade like the folks on here. And I think there are some pretty amazing, potentially generational opportunities, like we saw with some of the buys during the COVID-19 sell-off that lasted about 4 to 6 weeks. We saw what the market did after that. But when you think of the tech names like Apple, Amazon, Google, Microsoft, these are companies that have scale. They have pricing power. They are not going anywhere. They are only going to continue to grow their cloud businesses. I think with this particular quarter, there is so much going on with the macro picture, with geopolitics, with companies at valuations that they've been sitting at, that earnings really do mean something. And these valuations are coming back to a more reasonable level. And this is why earnings do count. We don't have the Fed bid in the market like we used to. Liquidity picture has changed. We know what's happening with rates. Everything is resetting. And I think there's some really good opportunities when it comes to big tech here. We have this conversation all the time, what's happening with Cathie Wood's fund, with ARK, and whether you have the levered ARK funds or short or long. She's a longer term investor. These are companies that we will most likely be hearing about 5 to 10 years from now. All of them, maybe, probably not. I think a lot of companies came public at ridiculous valuations. That's why I think we're seeing a slower IPO market this year. People are being more choosy than they probably were over the past couple of years. But in terms of the technologies that these companies are involved with, especially when you look at cloud, when you look at what's happening with Meta and Web3, and how our experiences are just going to completely shift, whether it comes to news or media consumption or retail consumption, these are the companies that are going to be here at scale.
Yep, absolutely. I do think that, so I've put you in clearly in, it's the bump in the road for tech. And this is a coming back to earth, so to speak, as opposed to, it was getting a little bit irrationally exuberant, to say the least. And I think that this is probably a healthy correction. In other news, and in a completely different direction, but certainly saturated as well, if you watch the regular news, Elon Musk makes an offer to buy Twitter. It is accepted, okay? And is it a publicity stunt, or is it a big victory for free speech? What are the ramifications also for Tesla? Because everybody's talking about Twitter, but there's some big things that are happening, and Elon's doing, maybe moving around, selling positions, whatever he's up to, in order to fund this deal. So what does it say? Is it that he's jumping ship, sort of? I mean, or is he just a victory for, is this just became like a patron of free speech? So I'd love to hear your thoughts, but this is kind of an interesting topic.
It is super interesting for a couple of reasons. So we know one of the biggest issues with Jack Dorsey was he was CEO of Square, CEO of Twitter, and that was one of the reasons why people on the board and all the talking heads thought that it wasn't appropriate that he was running two companies. More specific to what's happening with Twitter. And Mike, whether the audience knows it or not, I'm in grad school right now. I go to Rutgers for their Comms and Information Services program. And the courses that I have focused my concentration in are digital media law and policy and digital media innovation. So this is at the sweet spot of what I report on as a professional, and from an academia perspective, what I'm doing at school. So we, especially with the media innovation class, all the technologies that we talk about, how we're creating more immersive experiences and how that's happening via the cloud and Meta and Web3 and building on these blockchain technologies to offer these decentralized, more user-focused experiences is that sweet spot. So there's that. The second part of it is, I think we are at an incredible inflection point when it comes to digital media law and policy. When you think about the First Amendment or Section 230, part of the issue is nobody truly understands what free speech is. Not all of us are constitutional lawyers, but when we talk about Twitter and free speech and what that means, the First Amendment and most of these laws are geared towards government and censorship. Private companies can censor how they want to. That's one of the things. The other side of it, when we think about digital media policy and law as it relates to Section 230, what are these companies? Are they distribution channels? Are they producing content? And that's really what the argument is. When we talk about free speech and the polarization of our society right now, just because you don't agree with a certain viewpoint doesn't mean that you're shutting down free speech. So we have all these things arriving together at the perfect storm, where I think the technology and innovation is exciting at this inflection point. What's going to happen as policy and regulations evolve is also very interesting. Global standardization of it has always been a challenge because the way the US and EU approaches data privacy and free speech are two very different things. So I think over the next 5 to 10 years, not only is this going to be a generational innovation shift, but I also think that we're going to see a redesign, a restructure in terms of how this is governed and what that policy looks like.
Very, very interesting indeed. And certainly something that we should keep an eye on. The stocks were all over the place, meaning that Twitter initially was up, quite a bit of money, and then certainly Tesla has dropped quite a bit. And this is kind of it's almost acting like the way you would trade an acquisition, where the seller would usually drop in price and the buyer would usually go up in price, because the seller, the buyer is buying all the problems of the seller. And it sort of played out that way, even though, it wasn't a direct merger or acquisition. But it's certainly interesting from a trading perspective.
Well, Mike, to your point as well, when we were talking about longer term opportunities and do valuations look more attractive, that's not only from an investor perspective, but think about what it means for M&A. At some point, there's a lot of companies that have great cash on their balance sheets. Things were much cheaper now than they were in November 2021. So I think that could also be something to watch as well.
Yeah, that might spur some M&A activity, as companies that have cash on the books are going to go acquire companies that are not handling the higher interest rate environment so well. All right, that's exactly how the market works. In fact, I mean, the market is doing what it's supposed to be doing in terms of the correction and going back to valuations. All right, so in the news, in the war front, and I use those terms purposely, it appears that the defense industry will be the long-term winner in the war in Ukraine, between Russia and Ukraine. Almost every country around the world has increased its defense spending. I think Germany did a one-time military renovation, where they're going to upgrade all of their military in one shot, and then obviously link it to their GDP thereafter. The question is if the market is going to go through this correction, what are the sectors, regardless of that market correction, what sectors are going to do well? And to me, one comes to mind is defense, another is miners, maybe, as commodities tend to do well in recessionary times. What are some of your thoughts? Certainly, you mentioned banks and M&A.
Yeah, well, you know what? I think even before, sounds horrible to say, but war is obviously going to be good for certain sectors and certain businesses. It's a money making machine outside of the obvious humanitarian fallout. Sure. But I also think, Mike, before Ukraine and Russia were in the headlines, I mean, just think of like everything else. Warfare is becoming more about technology and cybersecurity than it necessarily is boots on the ground. So I think the defense industry has been going through a transition, just like we see with GE and Honeywell and these traditional industrial conglomerates moving to more cloud-based and technology-driven structures. So I think a lot of those trends could have been accelerated as a result of that. I mean, everything seems to be revolved around cybersecurity more so than boots on the ground. And I think with this situation in general, because Russia does have the threat of nuclear war, we're a little bit stymied by what we can do with ground warfare tactics. So I feel as if the cyberspace is really, it's something that will always exist as we are in a technical and digitized society. It has to exist.
Yes, absolutely. I think that's certainly a great sector for us to keep an eye on. And I always say, just because the market's not going unidirectionally up as it's been doing for almost 13 years, with the exception of 2020, a trader and day trader, swing trader is a stock picker. And that this reinforces that if you look for stocks and sectors that are in uptrends or in downtrends, obviously, if you're only going to go long, you want to stay away from, maybe you go look for miners and you look for consumer cyclicals, certainly cybersecurity. But if you can then match them up to some good charts, I think that's where your trading success and your investing success starts to really kick in. And speaking of probably more than just a few good chartists, that brings us to the winning results in our competition. And this is the final week of the trader competition, April 25th to April 29th. And our number one best trader is Best 0996 with an amazing $11,450 gain today and a total gain of $30,459. I would say that Best 0996 was looking to put some extra icing on the cake.
We've been doing this for 3-4 years now. I think, yeah. I know in the beginning we initially did more swing trading competitions, but I think with the day trading competitions, those are the best for 996 and 1000. Those are those are impressive numbers for 4 weeks. I would take that.
Yeah, I would say in New York, that's an income. I mean, that's a full-time living. If you're pulling out 30 grand, yeah. It's decent. Whereas I would say that I would give congratulations to anybody who was positive. This is one of our better, top 10 lists. Almost all 8 of our 10 number one traders on the top 10 list. 8 out of 10 are profitable and green. I would say number 8 is just flat. Number 8, 7, and 8 are flat, which is good because a lot of times we've seen many negative traders and up until the couple of top traders, 1, 2, and 3 slot. So,
well, I mean, it's great too. Everyone who 1 through 6, they've been active too. It's not like It was randomly lucky. They've been working at this hard.
Yeah, and there was a little bit of in the middle. There was a little bit of fluctuation. I remember a couple of the traders dropped back a couple of ranks, but 0996 ended up consistently taking charge and heading us into the close. So looking forward to meeting them in the near future in one of our upcoming shows. Top trades of the day. Any of these stocks look familiar to you? Not really. But it's no surprise to see that there are a number of the Chinese tech names on here. Clearly with the news overnight and the oversold conditions that we saw coming into it. But I don't think I recognize. I reckon on the fuller list, certainly. Yeah.
But some of these are certainly new for this competition.
Yeah. Well, these top 5 look like what we see very frequently, what we call the one-hit wonder pop and drop stocks. Some piece of news came out. What you mentioned just a few moments ago, which is like JD.com, had a big gap up based on the news that China might be relaxing lockdowns. Twitter certainly has been active every day since the announcement of the merger. mRNA, Moderna is obviously another actively traded stock. So is Roblox is another one of these fun stocks. AMD are probably our most common go back, full back stock for trading the competition is on every list. So is NEO for some reason. It's one of these high volume stocks. And then, of course, these are what I would call one hit wonder.
I think this is the first time we haven't had Micron on the list.
Yeah, like Micron seems to. I mean, it was one time we had Micron on the list, but this nothing, no Micron.
Yeah, we usually have it on there.
Yeah,
interesting.
Micron is one of the heaviest day trading stocks out there. I would say Micron and AMD are, which we have here.
It is, from a volume perspective, always in the top 5 or 10 on the Nasdaq 100 for sure.
And we got NVIDIA on here, which is a big name. And of course, Robinhood had some news as well, I believe. So, a couple of recognizable names as well. Well, I'm going to go take a look at those at the charts. I want to give a big congratulations. And again, so the winner is going to get their names up in lights at the NASDAQ. And hopefully we'll have a tour again soon, depending on how the winners want to take that up. So thank you so much for joining us. Have a great weekend, Joe.
All right. Take care. See you guys. Thank you.
Bye-bye now. All right. Let me jump to the charts. And I'm going to switch my screen. All right, so the first thing I'm going to do is I'm just going to stretch out my charts. All right. I'm going to put us onto a daily chart. Okay, and let's go through the SPY. Okay, so this is the S&P. This is pretty much what we did today. We kind of came into, big all-time support here today. We had an update yesterday going into some of the earnings announcements from the likes of Amazon, et cetera. I mean, this basically is a big head and shoulders pattern. This is a shoulder, a head, and another shoulder. And you have a very, very big potential neckline break here. There is the neckline break, which could potentially break the markets down. Now, obviously, very often you'll get a rally off of support. And if you look at some of the momentum indicators, let's add a section before. And I'm just going to add in the MACD. Do a MACD. Average. I think I passed it. There it is, MACD. All right, so if you look here, I mean, we are getting into the oversold area where we've been deeply oversold. We still have a little further down. So there's a little bit of a divergence here at this point in terms of being oversold. And that tells us because the lines haven't started to cross back, the MACD tends to be a little bit of a lagging indicator. But certainly a very, very pivotal and volatile couple of days that we've had here in the markets. Let's take a look at the QQQ. So the QQQ is the tech index. I would say that the Qs have closed below that level, which would indicate a technical break of another head and shoulders type formation. It's a little cleaner on the, this would be the break point. So you could see the shoulder, head, and the right shoulder. This would be the actual break point. Okay, and you can see the MACD is still kind of one line above the other line, which is indicating that the trend is still in effect to the downside, that there's no reversal yet. But it's getting close. There's going to probably be a very, very deeply oversold value next week. Let's take a look at the DIA. This is the Dow Jones Industrial Average. Very similar pattern. A little bit of distance still to support on the Dow. Let's take a look at Bitcoin, because Bitcoin, also GBTC, which now trades with technology, also did not have a good day. Kind of, again, new low, but not breaking down below this key range here. Let's take a look at gold. Gold, lower high, possible bull flag, but we'll see. It's kind of getting into the deeply oversold area and might be kind of refreshing the move. So the MACD is interesting. Let's see silver. Silver always a little bit more extenuated than gold. Let's see some of the big names. So one of the upside surprises was Facebook, which had a big gap up and is kind of stuck in its moving averages now. And the big loser is Amazon. So Amazon really, I mean, this is a bear flag, and it really just broke down from its bear flag formation. I mean, Amazon is really a very, very bearish chart overall. Let's see, Apple had pretty good earnings. Hold on one second. Just one second, I have some program not responding. Just give me 1 second. I have to restart my my projector. Just 1 second, just restarting my screen sharing. Just 1 second. Okay, I'm going to just go back to the presentation. It looks like I'm having some difficulty here with restarting the projector on that screen. All right. All right, everybody. So if there, you could do so, go to your Dash Trader update, subscribe to our YouTube channel at Dash Trader TV. Follow us on social media at Dash on LinkedIn, Twitter, Facebook, and Instagram. So follow us on all things Dash. Thank you so much for joining us here at the #1 Best Trader competition. And thank you. Look forward to seeing you in 2 weeks. Bye-bye, everybody.